Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris milling week, my apologies, Paris milling week. The market here has been somewhat different when compared to the ones in the US, though there had previously been some similarities. The first common feature was the idea of a rounded bottom pattern from June last year through to March this year, something I floated on the other grain markets. For this one here, I looked to the June 2025 high at 221.5 as being the key level for the lip of the rounded bottom, just above the super significant 50% absolute Fibonacci line at 218.75, which capped prices with a small double top in mid-March. Prices have triggered this level this week, but so far I've had a hard time actually stabilizing over it. Prior to this, back in mid-March, when the market last tried up there, it formed a double top that led to a quite large dark blue mid-March to early May bear channel. That became the handle, a specific pattern idea added to the rounded bottom. You have the handle at the end of it. And it also became a bull flag come bullish halfway hesitation pattern, formed from about mid-February to date. I said 2 weeks ago on this very matter, and I quote, only on a confirmed break of that 221.5 lip, well then we would have a primary potential up in the 244 area, with a secondary harder to reach potential up off the top of my daily chart up in the 256.25 area, end of quote. I also added at the same time, and I quote, however, as I mentioned earlier, the action over March and April has set up conditions for another pattern, one that is shorter in time than the June 25 to date rounded bottom, and that is a possible bullish halfway hesitation. So much like Chicago and Kansas City wheat, and also inspired by what I saw in the oilseeds and veg oils yesterday, that's a few weeks ago, we might have the action since early February to date as one leg of a possible bullish halfway hesitation. I think this is a valid case here, right now at least. So I'll put forward the following targets topside for such a pattern. Therefore, primary target X, wouldn't you believe it, at 221.25, right on that key earlier lip of that rounded bottom pattern. We next have a secondary hard to reach target X1 up in the 238.25 area. And that's the end of the quote. This week prices sell through target X at 221.25. Where we still have open target X1 up in the 238.25 area. Now I have been very tempted here to draw either a bullish Andrews or bullish shift picture for the action since February, but neither will fit very well. So for now I'll leave the potential target still available on the top side alone. Just keep a wary eye on that 221.5 level. Minneapolis wheat. 10 weeks ago, I applied what I said at the time, and I quote, it is an old technical analysis technique, but one that I recall worked well in the grains during the start of the Russo-Ukrainian war back earlier this decade. And that is doubling, tripling, or even more of bull channels. In this case, specifically the mid-January to late February bull channel. Now, tripling this higher gives another topside resistance above the next resistance at the April 24 low at 634.75 and close to the 38.2% Fibonacci line of the May to August 24 move at 644.5. End of quote. Making this quadrupled upwards and thus gave us even better resistance, holding over most of March and into mid-April. Well, sort of. Though time and distance have lessened the effectiveness of such a pattern analysis, and through the lows last week were influenced by the upper trend line of the quadrupled up bull channel, I actually suspect the 50% Fibonacci line of the May to August 24 move at 669.5 had a deeper impact in holding up the market. However, what this doubling, tripling, quadrupling upwards has most effectively shown is, as I said 2 weeks ago, and I quote, a March to late April hesitation within a mid-February to date bullish halfway hesitation, much as I originally saw in oilseeds and veg oils, and then again today in the grains. This is in addition to another earlier pattern which I described 2 weeks ago, so that's now 4 weeks ago. 2 weeks ago when I said, and I quote, "This brings us to the bigger picture here, and we have the same rounded bottom here that we have seen in other grain markets based on the November 2017 high at 665 3/4, which in turn gave us the key June 25 high. That was the start of the rounded bottom." End of quote. Now, I also added at the same time, and I quote, "Now, as I've said elsewhere, though we have not broken higher from this rounded bottom, this is not necessarily a bad thing, as rounded bottom patterns sometimes, as here, form a bottom and then a handle or extension to the right hand side, and that is what we have seen since early March." And that's the end of the quote. 3 weeks ago, the construction of that handle had finished, and thus, as I said 2 weeks ago, again, and I quote, "I can now verify the targets for this bullish halfway hesitation, with a primary target up in the 684 area, and a secondary hard to reach target up in the 723 area. As you can see, we have travelled all the way on these targets, indicating that this market is farther advanced than Chicago and Kansas City. Thus, it is now opportune to also lay out targets for the rounded bottom. For primary target X, up in the 737.5 area, so not too far away, but a secondary, harder to reach target X1 is up in the 774 area, near the top of my daily chart." End of quote. These targets still remain, and target X had been tantalizingly close earlier this week, with prices halted by some congestion between 723 3/4 to 727 1/4. Since then we have headed lower, though the actions did allow me to draw a mid-April to early May quite acute bullish shift pitchfork. Now, this is a first effort, and I would not highlight it for the simple reason that this lower time, currently at 683 even, has been tested. We've closed above it today, but it has been tested today, and I may have to retire it soon if it does not hold on a closing basis. It has done so far, but for now it will do. Although, however, still repeat here something I said 2 weeks ago, and I quote, "This is what the situation looks like right now, and as I said earlier, Minneapolis wheat seems farther along when compared to Kansas City or Chicago." And that's the end of the quote. London UK feed wheat. In recent weeks, prices have moved up over two key patterns over the very, very important dark blue neckline extension on my daily chart. It's currently at 169.10. This neckline is a pair of very long-term patterns, which I will shortly detail. However, what was happening in the immediate past was the formation and subsequent move higher over the trigger line of the July 25 to late April 26 very large rounded bottom pattern, with a first peak, which you can see. This had a first peak at the 50% absolute Fibonacci line at 180.5, and this move higher was done by the most recent pattern driving this market higher, and that's the bright red early March to mid-April bull channel. Prices broke higher out of this pattern with some vengeance late 3 weeks ago, and I have exploited the move higher, and well, actually they have exploited the move higher, notably over the 50% absolute Fibonacci line at 180.5, who have not as yet fully stabilized over it. It also saw the significant move up over the dark blue middle sign, currently at 182.10, of the end June to late October 25 bullish shift pitchfork. I spoke about this bullish pitchfork 4 weeks ago when I said, and I quote, "This pitchfork has so far not been tested, so this will be a first if we continue to move higher." End of quote. Well, the middle time did help cap prices for a while, along with a bright red upper bull channel line. But as I said, as is always seemingly happening in recent cases, when two such resistances are close together, rather than capping prices, it gives the market the opportunity to knock out two resistances both at the same time, which is what happened late 3 weeks ago. Hence, as I said 2 weeks ago, and I quote, "I can now look at the very large rounded bottom formed between July 25 to April 26 and detail some targets above. So we have a primary target X in the 199.60 area, with a secondary, harder to reach target X1 up above the top of my daily chart in the 212 area. End of quote. Okay, so that all those points being said, let me discuss my final points, and they're the same points I've been discussing here for well over a year, as some of them were something that I noted back in my annual commentary back in January 2025. To see these, it's best if we switch to my longer term monthly charts. Firstly, I saw back then the potential for a very large May 23 to April 25 bearish cat's ears pattern. That's akin to a double top, but formed after a big fall, such as the fall we had in early 2023. As well as this, we have an even longer term second pattern, an August 2020 to April 25, a very large head and shoulders top pattern. These two super long-term patterns both rely on one single feature, and that is their common neckline, which is highlighted in purple on my monthly chart, currently at 169.10, the same as on the daily chart I just spoke about. From these two longer-term bearish patterns, we have a primary target X3 for the bearish cat's ears pattern, we're down in the 127.5 zone, and a secondary hard to reach target X4 down in the 112.85 zone. For the head and shoulders top, we have an even lower primary target X5 down in the 64.20 zone, close to where sits the oldest uptrend I have on any of my 250 or so charts. The 1975 to date, yes, a half-century old uptrend, currently at 66.25. I am not even going to give you my secondary hard to achieve target for this pattern, as it's below zero. Please, please, please bear in mind that these are very long-term targets, stretching possibly over many years, but they are still targets below for these patterns above. Now, that all being said, July 2025 with changeover through a major spanner in the works for such longer-term patterns. The reactionary immediate countering monthly key reversal up for July last year went back above the purple neckline, but stopped at the 50% absolute Fibonacci line at 180.5. And just under the bright green 2023 to date upper bear channel line. That's currently at 169.70. This is the same as the purple downtrend seen on my earlier daily chart, the one that the market pushed up over in mid-March and has started to stabilize over since April. The question this posed, and it's a longer term question, is whether July 2025 was just a reactionary single month move higher or the beginning of something else. I have said for about 2 months now that these two bearish patterns will not be the way forward, and that what we have is a base for a move higher. March provided a single monthly close barely over the bright green upper bear channel line. April did much better for clean, clear close higher. However, I would like to see a minimum, at least one more month as a minimum. Ideally, close over the bright green upper bear channel line to verify this move higher, and ideally over the 50% absolute Fibonacci line at 180.5. This will then allow me to retire the potential targets below and set up possible targets, some very long-term targets higher up. Just please bear in mind that on the upside we have the gold 5-year moving average currently at 199.5 and the 50% Fibonacci line of the really big 1975 to 2022 move at 203.25. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.